So, with the introduction of pies in Trading 212, cost averaging has got a lot easier. So, for those of you who don't know, cost averaging is a long-term strategy used by investors to benefit or to mitigate fluctuations in price in the stock market. So, for example, here, if I click on my 3M stock, you can see that over the past, I think it's 7 years, the price has gone way up and has dropped back down. So, cost averaging, you would have benefited by buying at a low price. You would have bought at a high price, and over the long term it would have balanced out towards the middle. So this works particularly well with dividend paying companies, as when you buy it at a lower price, the dividend yield is a lot higher and the dividend remains. So as long as it's a strong company, you're going to be getting constant dividends, which is why I built my portfolio around dividend reinvestment. So with why the introduction of pies has particularly made this strategy easier is because you can set up not only automated payments, so you can set up your own schedule here. So if I show you into the settings in my investment plan, I can change my schedule. I can choose how I want to invest: daily, weekly, 2 weeks, monthly, 2 months, and 6 months are the current options. And you can also choose which day of the week you want to invest on. So with that, with the introduction of the pie segments, you can allocate a certain percentage to each company in your portfolio. It means that once one company starts getting really high in value, it will automatically invest the money into the companies that might have lost a bit. So what that means, as you can see here, my current holding in BAE Systems is 4.5%, but my target is 5%. So when I invest my money, say £100 or £200, however much I want to invest into this portfolio, it will spread that amount in the allocation evenly. So where Tyson Foods, my third stock there, is currently positive and it's above my allocation, that means it won't get any more because its price is a bit higher. But my cheaper stocks, as long as they're safe companies and the stock price is a bit lower, that's a benefit to dividend investors because you get a higher dividend yield. And with the automatic allocation of my funds that I invest, it will go to the ones that are automatically cheaper, which means I should be getting an overall higher dividend yield, which is a very nice feature. So there are many benefits to this, like I said. Cost averaging over the long term. So currently I have set up my, let's see what I've got here. I've got my auto invest for £25 every 2 weeks. The reason why it's quite a low amount at the moment, because I'm focusing on my shorter term goals. I'm focusing on maxing out my lifetime ISA. So you can do £4,000 every tax year. So I'm currently about halfway through, so I need another 2 paydays, maxed it out, and then I'll start really putting a lot of time and energy and money into this portfolio here. So that's pretty much the basics of it. It's a very useful feature. If you guys do have, I've been playing around with this for a while, so if you guys do have any questions, how auto invest works, or problems you might have experienced with it. Currently, I have had one problem. So when I use my total amount of remaining funds, so I've got £118.21 remaining in my free funds to invest. However, I cannot buy the fund and it doesn't load and it doesn't allocate this. So I've been having this problem. It worked when I allocated only £1,000. I want to try here quickly. So if I say only £100, hopefully it will work and allocate it to the resources. So yes, you can see, so when you put your whole value in, your whole remainder of free funds in, I think this is because when you buy the fund, that's how much value you actually be getting in the stocks. However, it doesn't account for stamp duty, which is currently, I think it's like 0.004%. And basically what that means is they want, when you buy your stocks, you know what value you're getting. So they take stamp duty off afterwards. So if you use your whole allocation of funds, it doesn't, you can't pay your tax, which is the stamp duty, which is why it doesn't work. So if you've had that problem, try spending in a lower amount. I'm pretty sure the stamp duty is the reason, but as you see, I've left just £18 in my account just to play around with, and I can invest afterwards. So that's kind of wraps up the video. They're the kind of features that have benefited cost averaging. So let me know how you guys are using it. Have you guys built a pie? What kind of diversification allocation you've given to certain stocks and shares? Let me know what you think of my portfolio. I've done a recent video on it. So thank you guys for watching. I'll catch you guys next time. Cheers.